Yes, the first question, bills of exchange. So two parties, they draw bill on the other. So that's all about. So bills receivable or bills payable, we need to record the entries in the respective parties account. So now we'll see the question. On 1st January 2021, Swapnil draws two bills of exchange, one for 32,000 and the other for 50,000. Now the bill of exchange for the first one, that is 32,000, is a 2 months validity bill, while the other bill, 50,000 bill, is for 3 months. Okay, 2, 3. And these bills are accepted by Vishal. So the other person. Now 3 months are over, Jan, Feb, March. 4th March 2021, Vishal request. So 2 months are over. So at the end of 2 months, there's one bill which is expiring. So Vishal comes forward and requests Swapnil to renew the first bill with an interest. He's ready to pay an interest at the rate of 15% per annum for 2 more months. So when is it getting due? So if it's a 1st January dated bill, 2 months period should be definitely 1st March plus 3 grace days, which is 4th March. So and then it gets, he comes forward and says that he's unable to pay. I'm ready to pay an interest that is prescribed rate and kindly renew for 2 more months. So it's like a cancellation of the old bill and taking a fresh bill now. Okay, he was also okay and they agreed to the proposal. Now on 25th March, the same month, okay. So Vishal retires the acceptance for rupees 50,000. So the other bill. So he is retiring the acceptance for rupees 50,000 and it has 3 months validity, but he is retiring it at an early period. So he gets a rebate, discount being rupees 500 because of retiring it at an early period. Now, before the due date of the old bill, which has got renewed. So before the due date of the renewed bill, Vishal is totally insolvent. And what can be recovered from his account was 50 paisa in a rupee, that is 50%. Now show the journal entries. Definitely, when you write journal entries, it has to be with narrations. So account students, narration is very important. You know the entry, you cannot be writing it in the name for saving time. You cannot be writing only the journal entry without narrations. Write the narration in the books of Swapnil. So it's for Swapnil, whether it is a bills receivable or a payable. Yes. Who is paying the bill amount? Vishal is paying the bill amount. So Vishal, for him, for Swapnil, it is a bills receivable. Okay. So now we are going to journalize these entries. So first, have you all identified whether it is receivable or payable? That's the foremost step. Is that all clear? Yes, students? No, ma'am, we haven't revised this topic that way. No? Able to understand the question, we can move further?
Yes, ma'am. Understand the question.
So if you understand from where it has to, so bills receivable, don't make a mistake by selecting bills payable, then all your entries will be wrong. Not even starting 1 mark also will not be able to. So we will need to correctly understand whether the books of Swapnil, is it receivable or payable. So it has been drawn by Swapnil. Yeah. So it's receivable for him, and Vishal has also accepted. He's accepting to pay the amount drawn on it. Now, so bills receivable. So at a go, on 1st January itself, 2 bills are coming into picture. So the same day transaction, both are similar transaction, though it is a different amount. I can club the entries and put. So it's bills receivable, debtor, another bills receivable. So one for 32,000, the other for 50,000. Draw it. Yes, bills receivable debtor 32,000, bills receivable debit 50,000 to who? Our Vishal. He is the one who's going to pay this bill. Okay, he stands as a debtor here. So bills receivable debit, bills receivable number 2 debit to Vishal. So the narration, see clearly. So drawing of bills receivable, one which matures on so, and the other which matures on this. So not necessary you'll have to write the same narration, but you have to definitely give the narration. So club these amount, add it and write it, which stands for which Vishal has to play, which Vishal has to pay. Now, next, so what is the next date after Jan 1st? Nothing has moved in there. No transaction has taken place in the entire month of Jan. Then February also no transaction. The next transaction falls on March 4th when the first bill is due. So Vishal has to come back and you need to collect the amount and close the bills receivable. But Vishal did not come back with the amount. He came back empty-handed. So he says, please cancel this. I'm agreeing to pay an extra interest and kindly renew. So you just cancel the old bill by debiting Vishal and crediting bills receivable. So the bills receivable number 1 is cancelled. But what you're doing is drawing up another bill on the same date. So now it's bills receivable, totally a new bill kind of. So bills receivable number 3, the same amount, but with an interest accumulated on it. Okay. So interest, he's agreeing for 15% per annum interest. Okay. So being the drawing of bill of exchange number 3, which is maturing from March 4th, it has 2 more months plus 3 more grace days. Okay. So it matures on 7/5 together with 15% interest per annum. So you just calculate for that balance of period. Okay, you get this amount. So he has to pay interest of 800 plus original bill amount of 32,000. So totally 32,800. The third bill is drawn. March 4th, the next transaction takes place on March 25th, where the second bill he's coming up to, he's agreeing to pay. Since he is paying at an early period, he's getting a rebate known as discount. So he's coming forward to pay the second bill of 49,000, 50,000, since he's getting a discount of 500. But for Swapnil, is this an income or an expense, this discount? For Swapnil, is it an expense or an income? This discount amount of 500. Yes, students?
And for Swapnil is the expense.
Yes, it's an expense. Very good. So for him, this discount is a nominal account. So debit all expenses. So bank, he is receiving only 49,500 from Vishal. Discount amount 500 given to him. So now reverse the bills receivable number 2, 50,000 and close it off. Okay. Now March 25th, second bill is totally over. Now what happens before the third bill? May 7th, I'm due to get the third bill. Okay, but what happened? He becomes insolvent. So I am not able to recover that 32,800 completely. So since he is becoming insolvent, I'll first cancel this bill. Either it has to be cancelled or when he pays, you collect the amount and cancel the bill. So now since I'm not recovering the full amount, I'll debit Vishal for the entire 32,800 to bills receivable cancelling number, the third bill. Okay, dishonored. The insolvent means he's in a state not to pay. He doesn't have funds. So that's insolvency. So then what will happen? Insolvent means your bill gets dishonored. Okay, that's the concept. So due to the dishonor, you're cancelling this third bill, but you're able to get 50 paise in a rupee. So that is 50% of the amount. So cancel the bill with the original value, and what you recover from him, you just mark it for what you get back to Vishal, whatever he has received from him, from his official assignee. So 50% of 32,800. Yes, and the balance somewhere it has to go, right? What is that account called? I will not get for sure. So Vishal is insolvent. This is totally dishonored and I will not get it for sure. That goes into an account called bad debts. It's not you're doubtful, you're confirming it's a bad debt. You will not recover it. So bad debts to Vishal for the balance 16,400. So Vishal is debited by 32,800 and half of it you are recovering from him. Half of it you are moving it to bad debts. So his account is also closed. There's no pending amount from him. Yes. So give the entries as being the balance 50% of debt recovered from him.
Yes, ma'am.
Yeah, the next special transaction is consignment. So goods sent by consignor. Okay. how much ever is possible for him to sell and return back the balance to the consignor. So that's the concept of consignment. Okay. So here we have Mr. Sam and Alex. So Sam from Kerala consigned to Mr. Alex of Chennai for goods on a consignment basis at sale plus invoice price, for sale at invoice price. And Mr. Alex will get a commission of 5% on the sales at invoice price. Okay, whatever he's selling, 5% on that is his commission. And 20% of any, if there is a surplus price which has been realized above the invoice price. So if invoice price is 100, if he's selling how many ever quantity he's selling, he'll get 5%. But if he's able to sell at 110 rupees or 100, anything above 100, he's getting an extra commission at the rate of 20%, which has been realized above the invoice price. Okay. Now, goods costing, how much has been sent? Costing 5 lakhs worth goods have been consigned to him at an invoice price of 7,50,000. So the original price of the goods are not known to the consignee. Now, consignor has also incurred some expenses. The direct expenses of the consignor was 50,000. And at year, the 31/3/2021, close of the year, he's getting one account statement from Alex saying, I have sold 6 lakhs goods. Okay, but that is with respect to 4/5 of the quantity of goods that you have sent to me. So not the entire value he has sold. 4/5 of the goods that was sent to him was sold, which is amounting to 6 lakhs. Mr. Alex has also incurred some direct expenses, which is about 15,000. So Mr. Alex accepted a bill drawn by Mr. Sam. So this amount which he'll get, Mr. Sam has given a bill for rupees 5 lakhs and he remitted the balance in cash. Okay, so we're going to find out what is the final amount that was remitted to Mr. Alex. So prepare the consignment account 1 and Alex account in the books of Mr. Sam, who has sent the goods. Sam sent the goods to Alex. So in his books, the consignment books, we are preparing consignment account and Alex account. Okay, so consignment is also like a nominal account. So wherever debit comes, you'll have to, debit expenses comes, you'll have to put in consignment. So that's, if you remember this trick, if you understand the logic behind accounting, every entry is easy. Okay. So in the books of Mr. Sam, that's the opening, very clear. In whose books are you preparing? You need to mention. The first account that is asked is consignment account. Am I fast? Am I very quick? No, right? If the question is easy to understand, you can go ahead.
Yeah, ma'am.
Yeah. So this is, you will have to prepare a ledger. So they're asking you to prepare consignment account. So after journalizing, the next step, ledger. So people who are familiar, who are comfortable journalizing first and then preparing ledger, it may be a waste of, you're wasting some amount of time. So if you're very understanding the logic behind journalizing, you can easily prepare the ledger directly. But still, if you're comfortable to prepare the journal first, do it as a working note. Okay, behind, don't give that as a friend thing, do it as a working note. From there, you can ledgerize. Yes, so we have ledger account, date, particulars amount, date, particulars amount. Okay, so starting from the beginning of the transaction, we'll go back to the question. 1st January. So goods have been sent on consignment. That's what happened on 1st January. So how much worth goods have been sent? 7,50,000. So you are posting the entries all at the invoice price. Okay, but it should always be shown at cost. So what, you know the concept, right? Consignment. So you will reverse that portion of profit at the end. Yes. No, you are not able to understand, ma'am. What is this? So you would have been definitely told whenever consignment account is at invoice price, invoice method of billing, it will be shown at the sale price, invoice price initially, but the consignment account cannot be at this invoice price itself. It has to be lowered. Whatever was the cost price needs to be brought down. So Sam knows at what price he is at, the actual cost is. So he will be able to bring it down. So first put all the entries at invoice price. So invoice price, the goods have been sent on consignment, 7,50,000. Okay, and it was said the consignor incurred an expense, consignment expense, direct expense, 50,000. So consignment, as I said, is a nominal account. So consignment, debit all expenses to goods to bank. The expenses part is going. Okay, and on this account, the goods are moving. So 750 plus 50. This has happened on Jan 1st. The consigned, the direct expenses was so much. Now I am quickly moving on to 31.3. So that's the next transaction that's happened. So you're receiving the statement from Alex Consignee, what all he sold. So he says he has made sales of 6 lakhs. So that's the immediate transaction that you will all be comfortable with to write up. So you write 7,50,000 and 50,000. As I said, it needs to be lower down. So 7,50,000 I sent to him. That's the invoice price. But I know, Sam knows that the cost is only 5 lakhs. So in order to reduce the profit portion of the goods that have been sent down, I'm reversing that profit element alone. So consignment to goods sent on consignment 750 and goods sent on consignment to consignment is again the balance, the difference portion, 7,50,000 minus 5 lakhs. So this is the profit element. So I'm just removing it. Now, originally the goods which are sent on consignment is at what value? Yes, it's at what value? Yes, students. By silence, you don't know, you're not getting it. There can be two things only. So I sent to him at 7,50,000, which is sale price, invoice price. It has profit portion in it, but my consignment account cannot be with the profit element. So I'm passing a reversal entry for the profit element alone. So 2,50,000 once I pass, it gets lowered. So now it is at cost price. So the goods which are sent on consignment stands at 5 lakhs only. Yes?
Yes, ma'am.
Yeah. So that's the reversal entry which you do immediately. Then Mr. Alex sends you a sales statement saying he has sold 6 lakhs worth goods. So 6 lakhs is the sale portion that you have definitely made. So this can be on profit. Yeah. So sales 6 lakhs. Now what happens? What all he has incurred? He says, I have also incurred the direct expenses. So like how the consignor expenses, you have debited consignment to bank. Here you will debit consignment only, but credit Alex because he has paid those expenses. Okay, so 15,000 worth expense were incurred by him. So you credit Alex, not amount which has gone from your bank or your cash. It's Alex who have spent. So you are crediting him for the amount that he spent. Because it is like how much I owe him, how much he owes me. So in order to get that total properly, you will credit Alex. He spent it. Okay, next. Then they say there is a commission to be given to him at the rate of 5% on whatever sales he is making. So 6 lakh is the normal sale price which he has made. So on that 5% commission amounts to 30,000. So you are crediting Alex for expense which he incurred 15,000 and for the commission amount of 5% on 6 lakh sales. These two are the dues that Sam has to pay Alex. Either he has incurred it or something is liable to him in the name of commission. Now, so I have reversed the goods that are sent on consignment to bring it at cost value. At the same time, I also have another thing. So there is some closing stock which is lying, right? He sold only how much? He's not sold the entire 100% of the goods that were consigned to him. He sold only 4/5. So 1/5 of the goods are what? Lying in the stock, closing stock. So my closing stock is how much? The stock on consignment is, yeah, this 1/5 worth of goods. Is you all agree? And the price for the stock is the goods which are sent at invoice price 7,50,000 plus all the direct expenses that you have incurred on the goods. So that is the value of the closing stock. The value of the goods plus all direct expenses on the goods that have been incurred. So that is my value of the stock. On that, 1/5 amounts to 1,63,000. So this is the closing stock of my goods. At the same time, okay, I need to reverse this. What I need to reverse? The 7,50,000 is what? It's a sale price. It needs to be, the consignment account needs to be at cost price. So 7,50,000 means there is a element portion, profit element portion of 2,50,000. Find out 1/5 of 2,50,000. I get 50,000. So reverse this. So here the closing stock appears. On that stock, there is a stock reserve which I need to credit for the profit element which is included in the closing stock. So to stock reserve 50,000, 2,50,000 profit into 1/5 closing stock. To stock reserve. Okay, now total it up. You get the profit that has been made on consignment. Yes, people. So there's another portion they're saying he's entitled to 5% commission plus a 20% commission he will get when? Only when he is able to sell the goods at an extra price than what I have invoiced to him. I have invoiced to him at 7,50,000. So if he's able to sell it at a higher price, he'll get 20% extra. But now we need to find out he's telling us the sales made by him is 6 lakhs. 6 lakhs is 4/5 of the goods. So 4/5 of 7,50,000 is equal to 6 lakhs. So there's nothing extra amount that he has sold. 7,50,000 worth goods were sent to Alex. On that, 4/5 of the goods were sold by him, which is 4/5. You just multiply and 4 by divide by 5, you'll get 6 lakhs. The sales made by him is also 6 lakhs. So he sold it at the normal price only. No additional extra price has been charged by him. So no extra commission. Okay. Now the other account that we need to prepare is Alex account. So whatever was given to him, what you owe to him and what he owes to you. So what you have to give him. So it's actually here. Okay, it is actually here. From here you can prepare the Alex account. So goods sent on consignment, Alex doesn't come in. Bank's consignor expense also, this is the consignor expense of 50, he doesn't come in. But sales has been made not by you, he made the sales. So this 6 lakhs you need to debit. So Alex to consignment. So that 6 lakhs would be here for the sales made by him. And he incurred a 15,000 expense and 30,000 commission you got to pay him. The 6 lakhs amount he has to give you. He has collected this amount from the customers, right? So this amount he has to give you, and these two amounts you have to give him. So 45,000, and you are drawing a bill on Alex, right? That's what it said. For 5 lakhs, you're drawing a bill. So when Sam draws a bill, means it's a receivable for him. He will get from Alex the 6 lakhs. For that, he's drawn a bill for 5 lakhs, and 45,000 Sam has to pay Alex. So the balance is received by way of cash. So that's the balancing figure. Alex actually needs to pay 6 lakhs for the sales he made. Out of that, 45,000 is the commission and expenses which Sam has to pay. So he is drawing a 5 lakhs bills receivable. Balance, this amount will be given. The third special transaction. We are done with bill of exchange consignment. The third one is sale of the goods on approval or return basis. So some parties they may agree to buy your goods. They may agree to, you have sold it to them, but there is a chance that you will get it back, or there is a chance they will keep it and they will sell it to customers. So sale of the goods on approval or return basis. Okay. So most of the transaction we see like this. We buy from big shops, but then they would have made an agreement with the wholesalers. They may return the stocks that are unsold at a particular fixed time, before a fixed time. Okay, so that's most of the transactions happen on sale of goods on approval or that may get returned. So how do we account this? So Mr. Who is he now? Okay, Mr. S. So he has sold the goods on sale or return to customers who has the choice of returning the goods, but within 15 days. Not that they can return anytime. So the agreed timeline will be generally discussed in the beginning itself. So they have an option of returning the goods within 15 days, after which it will be considered as a sale only if they're not returned within the fixed period. What happened between the month of April? So on April 2nd, he sold to G for 20, 4th H 36, 16th I 50, 20th Mr. J 16, 24th K 42, and 28th L 60,000. Now within the stipulated time, that is 15 days, two parties came back. I don't want your goods, return it. So two parties, Mr. G and I, returned the goods, while H, J, K informed I am taking the goods. So they inform that they are accepting the goods. Okay, prepare the following in the books of S who sold the goods action. So goods on sales or return, sold and returned the day books. Okay, that's the goods. In the books of S, you need to prepare goods on sales or return, sold and returned day books, or goods on sales or return total account. So both. So goods on sales, so the goods that have been sold on sales or return, okay, that is what you're preparing in the books of S. So that's very easy. So whatever is given, you're going to prepare one statement kind, showing how much has been sold and showing how much has been returned. So that's very easy. The first one, which says goods on sales or return, which are sold or either returned, that you're going to prepare. So this is there in the question. So the first half is just replicate whatever is there in the question. April 2nd, 4th, 16, 20, all the numbers are fitted here. Now, some date they have come back, right? Within that due date. So from 2nd onwards, if you take 15 days, that's their returning time period. It is around April 17th. So April 17th, Mr. G returned. May 1st, for the goods that are being sold to IE, he returned. The other parties, H, J, K, respectively, have sold it. In the sense, they have accepted it. So it's like a sales that you have made to H, J, and K. However, L, ma'am, they have not said anything. If you say L, for L, you just sold to him only on April 28th. Okay, so the due date is May 13th. You probably have some time. We don't know whether he is accepting it or returning it. In case if he's holding it even after the expiry period, it is like he's selling it. It's like he was selling the goods to him. Okay. Yes. No. So 2,24,000 and how much has been sold, how much has been returned. So that's the first account that you know how to prepare. Goods on sales or return, sold and returned day book in the books of S. Now again in the books of S, we have the goods that are sold, goods on sales or return, the total account. Okay, so very simple actually. So you just prepare this, the goods on sales or return total, that's the ledger name. So here you have sold all those goods, right? Who are those parties? G, H, I, J, K, L, 6 parties. So the those goods have been sold to customers for sale on approval account. This is the account, customers for sale and approval account. So here, now this is some parties have returned and some parties have sold. Whenever you sell those goods to some people, how will you write those entries? So we have 20,000, 30,000, 36,000, 50,000, 16, 42, 60. So these are the parties to whom you have sent. So goods gone, goods sent on sales or return to Mr. G20, to Mr. H36, I50, J, K, L. So much 2,24,000. It's like a sales or return basis, but you record it here. Yeah, goods, the goods that have gone. Goods sent on sales or return to goods on sales or return, total account. Now, how much are you returning, getting it back, and how much are you selling it out of this? So when you receive it, respective dates, some people return, some people sell. So to customers for sale and approval account, what happened? G is the starting. G has actually returned 20,000. H has actually accepted, so sold, returned by I, sold to J and sold to K. Okay, so balance is, there is a deficiency in your debit side, that is 60,000. That is Mr. L's amount is the deficiency. So this we are not still sure. Okay, so this is the balance carrying. It's a very, very simple thing. These two things are very simple. You just need to know due date. You need to know two things. Within the due date, I need to check whether they have returned or sold. Prepare one total for sold amount, prepare one total for returned amount. This is the account to be prepared for goods on sales or return, sold and returned day book. Sold and returned day book. The other is just goods on sales or return total account. We are just matching the total with what has been returned on sales or returned or sold. Balance is the carry forward one, which has not got any information confirmation. Move to account current, another interesting one. Yes, can I get a nod?
Yes, ma'am.
Yeah. So account current is basically there are multiple transactions. So the average due date, account current, or all, when there are multiple transactions between two parties. So we may say in banker customer, or it may be a manufacturer wholesaler. So the party lends money or gives the goods, and the other party will pay in installments period. Okay, in the meantime, they may also buy, sell. They may pay some amount, they may hold some amount. Again, there will be one transaction. So multiple transactions keeps happening within a fixed period. So we are going to find out how much is the interest. So if you say I'm lending to so much 1 lakh rupees, and I say you've got to repay me within 3 months, and it will carry interest rate. Okay, 3 months period, he comes back at the end of the 3 months, he comes back. But here, what happens is, today I give him 1 lakh, tomorrow I'm again buying something from him, and 10 days later, he pays me 50,000. 20 days later, he again buys some goods from me. So there are multiple transactions that happens. So how will I calculate interest for a fixed period? So here the interest calculation is important, where multiple transactions happen between a fixed period. That's the essence of account current. Okay. So here these are the transactions that have taken place between X and Y, between 1st October and 31st March closing period. So what are the transactions? October 1st, he has an opening balance. So balance due to X by Y was 3,000. Opening balance. So who is actually owing? Due to X. So Y has to pay this amount to X. Opening amount 3,000. Now goods sold by X to Y. Goods sold by X to Y. So again, X is selling. So already 3,000 is owing from Y. Now one more sales has been made by X. So Y is again owing for 2,500. Now in turn, Y is selling some goods to X. So goods sold by Y to X is 4,000. Invoice dated, very important. The transaction, though it is recorded as November 16, the invoice is drawn only on 26th. So which date is relevant for me? 16th or 26th? It is 26th, the invoice drawing date. Again, Y is selling goods to X. The dated invoice is 17th December for 3,500. So two amount Y owes to X and two amount X owes to Y. Then we are moving on to 2021, Jan 3rd. Now, promissory note is given by X to Y at 3 months. So I promise to pay. X is giving Y for 5,000 because X is owing more now. Now it's paid by cash from X to Y, 1,000. Again, goods are sold from X to Y, 4,300. Goods are sold from Y to X, 2,700. However, the invoice date is April 8th, very important. Here and all, it was well within the period, but now it is crossed 31st March. Okay, to be noted. Now, draw up an account current up to 31st March only to be rendered by X to Y. So in the books of X, we are going. So X is going to write this account current and show it to Y. So in the books of X, we're going to prepare an account current with Y. That's the very important heading. Interest is charged at 10% per annum. So interest calculation is what our importance is. So in the books of, actually it is X, okay? So it's not changed here. In the books of X, Y in account current with X. That's how you have to note it. So whose books you are preparing? You are preparing a ledger account for the other party. Y in account current with X. Up to 31st March. Now prepare this table. How do I prepare this table? So you should be all knowing. Date. Ledger account, what does it have? Normal ledger. Date particulars amount. Date particulars amount. Same. But what are the extra columns that we need here? Note down only that. What we require most important is a due date concept. When each transaction has a due date. Okay, they may say 3 months. 3 months due date. When the due date is not given, you need to consider the date of the transaction as the due date. This is very important point. Due date given, the due date, note down the due date. Due date is not given, the date of the transaction itself becomes the due date. Now I need to calculate the difference between the due date and the close of accounts, that is 31st March in this case. So he is closing the books as on 31st March. So the difference between 31st March and the due date that I have noted down in every transaction. And then amount. So these two columns are with regard to dates extra, and I need to multiply the number of days away from the due date and the transaction date, that into the amount. I'll get a product column. So this is the third column, which is extra. So originally you have 3 columns plus 3 columns extra on each side. Do you get my point? Is everybody?
Yes,
So,
ma'am.
yeah, you should not be confused. 3 columns normally in a ledger account plus 3 extra columns. Date, due date 1 column, number of days from the due date to the 31st March 1 column, that is number of days, not date. And that number of days into the amount gives my product, that's the third column extra. Similarly, the other side also. Now for every transaction date wise, just note down the entries. October 1st, it's a balance brought down. So it is a, he owes you, right? So for me, it's a debit, balance brought down, 2 balance brought down. It comes on the credit side when I have to pay him, creditor, debtor concept. So here he has to pay me. So H2 balance brought down, 3,000 is already given, he owes. And October 1st, so since it's October 1st, the due date is 31st March, that we all know. In all cases, it is 31st March. The end of the transaction is. So the due date to 31st March, the difference, if you say, it is 182 days. For the brought down balance alone, you can include October 1st because it is already a brought down balance. But for any other fresh transaction, you cannot include the start date. The number of days calculation will begin from the next date. So from, if it is October 18th, it will begin from October 19th to 31st March. The last date will be included, but the first date will not be included. But since it is a brought down balance, October it has 30 days, 31 days, November 30, December 31, January 31, February 28, and March 31. So if you add up, you'll get 182 days. The amount, multiply product. The next transaction, sales. So you all know the entry for sales, cash paid, received, and all that. The October 18, sales have been made. There is no due date given here. So October 18, the due date is the date of the transaction itself. Write this. Then you can calculate 31st March to October 18th. Leave 18th, 19th onwards you calculate. You get 164 days. Into the amount, you get the product. Then the transaction is November 16th, where he has purchased from Y. It's between X and Y only, not other parties. So purchased from Y. Here, the due date is, though the transaction has taken place on November 16th, when is the invoice drawn? November 26th. So from November 26th, that is leaving November 26th, from 27th onwards to 31st March, the number of days will be calculated, 125. Into the value of purchases made, I get product. Similarly, another purchase, but the invoice date is 17. So the due date begins from I mean, the due date falls on December 17th. However, I'll take from 18th of December to 31st March. I get 104 into the amount. So it moves to 2021. Another bills has been drawn, promissory note. So promissory note means he promises to pay. So it's a bills payable for X. So Y to bills payable. It falls due on April 6th. If you see, he's drawn a bill, just I go to the question. Promissory note given on 3rd January, but for 3 months. So Feb 3rd, March 3rd, April 3rd, plus 3 grace days. So April 6th only it is getting matured. So my closing period is 31st March. So the 6 days falls away from my closing date. So I give it in negative. Okay, I don't account the original transaction. The original transaction will not be entered. The remaining negative period, I will account it in a negative way, red ink interest method. Okay, it's like a red ink interest concept. Write the amount. So 5,000 into 6 will also be in a negative way. Okay, this is the red ink concept. Now, next what happens? February 4th, you are paying cash. Those are all falling within the due date of transaction itself, no problem. March 21st, you are making sales within the due date, no problem. April 8th, your March 28th, there's an April 8th purchase bill. So April 8th means away from 31st March. So again, I need to make an entry for the 8 days is from 31st March, reading that 1 to 8th of April. So this 2,700, it's a negative one again. So those away from the due date of the closing statement date will be in negative. Now, what I get? And 21,600 is the last entry here. Now, what you do is total up the products column. Okay. The next step is leave the amounts that are here, 181 and all ignore. Total up the products column. See if debit is more or credit is more. I get the total side here as 10,24,000. My debit side is more. 43 plus 55 minus 30 plus 410 plus 546. I get 1024 and this side is less. So the difference is put here. By balance, there is a remaining balance of product column is 1,81,600. Write it here. Now I need to, this is the balance of product. On that 10% interest will be calculated for a single day. 10% is for per annum. I'm just calculating for a single day. This is a product method. So not interest method. So already we just calculate for one single day. Here there's a slight error. It is 181,600, not 1181,600. You just calculate with your calculator or excellency. 181,600 into 10% into 1 by 365 just for one day. So the interest for one day is 50 rupees. So now you write this amount here. March 31st. This is also March 31st. To interest on the amount column. That is the amount that he has to pay. Okay, or amount received, whichever column. If my 181,600 is here, my interest will appear here. If my balance of product has been on the debit side, my interest will appear on the credit side. That's the opposite column you will have to put in. So if I had a debit deficiency, my balance of products will be two balance of products. I would have entered it. Interest will automatically go to the credit side. Since here it is on the credit side is a deficiency, my interest is appearing as here. So H to interest, probably you'll collect interest of rupees 50 from me. Okay, interest being a nominal account to interest. Credit all incomes and gains. So this is how interest calculation is done. Any doubts? Account current is also very easy, like your bills of exchange. All special transactions are easy. You can easily score marks here. And it is also very important. You will definitely get any problem from this special transaction. So though there are multiple topics, it's all very small, simple concepts. You just have to understand it and do.